Welcome back to the Financial Autonomy Podcast. My name's Paul Benson, financial planner and practice principal at Guidance Financial Services. Today's episode's a big one. How to get $100,000 per year in retirement tax-free. Yep, tax-free. I mean, it sounds almost too good to be true, doesn't it? But with careful planning, the rules in Australia do allow for this outcome, for many people anyway. We'll walk you through how, when and under what conditions. In this episode, I'm going to take a look at the superannuation pension phase tax break, how the transfer balance cap limits and enables tax-free income, and some strategies that you might be able to use. So look, let's dive in. Okay, so Section 1, the superannuation pension phase tax break. So whilst you're working and contributing to your super fund, it's in what's known as the accumulation phase. The accumulation phase receives favourable tax treatment, but there is still tax that's paid. Where super really gets interesting though is when you shift to the next phase, known as the pension phase. Once you convert your super balance into pension phase, earnings on the assets inside the pension are taxed at 0%. There's no tax on dividends, interest, or capital gains within that pension. And the pension income you draw is also tax-free. Once in the pension phase, there's a minimum amount that you're required to withdraw each year. There is no maximum, so you have considerable flexibility here. The minimum is determined by your age. For people between 65 and 75 years of age, the minimum drawing is 5% of the balance. So that being the case, in order to generate tax-free income of $100,000 per year, you would want $2 million in superannuation savings in that age bracket, 65 to 75. Now, $2 million, just park that one in the brain. So, Section 2 is transfer balance cap. Now, the transfer balance cap is the upper limit on how much capital you can move into the tax-free pension phase. As of now, that cap just happens to be $2 million per person. If you have a spouse and you can successfully, split your balances so that they're even, a couple could potentially have $4 million in tax-free pension accounts. Structuring and planning for couples is crucial because it's rarely the case that each member of a couple ends up with relatively equal balances unless some deliberate action is taken to make that the case. It's worthwhile noting that the transfer balance cap is indexed over time, so it will shift upwards in future years. Okay, so let's have a look at some strategy items. Now, $2 million is a large amount to have in super, but it's an amount that could be within reach for high income earners with some good planning. So here's a few strategy options to get you there. Firstly, you want to be thinking about salary sacrifice and concessional contributions in the lead up to retirement. The maximum you can put into super under these sort of concessional limits is $30,000 per year. So you really want to use it all up, right? And money that you put into super through that way, it's taxed at 15% on the way in. Other than high income earners above $250,000, you might pay 30% tax. So concessional tax on the way in, use up your $30,000 limits. That's going to help your balance grow. Next is to use the bring forward provisions to shift funds that are outside of super into the superannuation environment as you approach retirement. The maximum that you can contribute in a single year is $360,000. And if you do that, that means you can't do those type of contributions for the next 2 years. Now, do be sure to manage the capital gains tax if you're selling assets to make this possible. It could be that the timing around that needs to occur after you've retired so that the capital gain is added to it to a period where you don't have employment income. So definitely a bit of planning there. Downsizer is another opportunity. So each person can boost their super by $300,000 using the downsizer provision if they own a home for more than 10 years and make a move later in life. Spouse splitting is another interesting strategy opportunity that maybe doesn't get enough attention. So, spouse splitting provides a way for a spouse with a high super balance to have their employer super contributions diverted to their spouse at the end of the financial year. It's very helpful in managing within the transfer balance cap and trying to equalise balances. And then the final strategy opportunity is to invest for growth. There's only a certain amount of money that you can get into your super fund, but if you can earn a higher return on the balance within your super fund, then it's going to grow and get you closer to that $2 million transfer balance cap, which is the optimum amount to have in super. So if retirement's still some time off, ensure that your super is invested with a strong growth bias. Yes, it will experience volatility, but it will also get you to a larger final retirement balance, which then puts you on course for generous tax-free income. Generating $100,000 per year of tax-free income is possible for retirees in Australia. Indeed, that amount is per person, so a couple could have double this. Our superannuation system is extremely generous. Make sure you're making the most of the opportunities in this space. If you'd like help modelling your numbers or building a custom plan, schedule a meeting through our website. And just to mention, if you're not currently receiving our weekly Gaining Choice email, you can add yourself to the list by going to our website, the guidance website, and scrolling. It's almost at the bottom, not quite, but very close to the bottom. Our website address is guidancefs.com.au. In the Gaining Choice email each week, there's a weekly market update, a link to the most recent podcast and Ask an Expert column, and a quiz of the week. So look, check it out. It's free, and if it's not your cup of tea, it's easy to unsubscribe. All right. Well, thank you for listening to another Financial Autonomy podcast episode. I'll be back in a fortnight's time. Of course, next week, Nick will have another Wealth Builder podcast episode for you. Bye for now.